Duolingo stock is crashing from $550 a share around May down all the way to $279 as I record this video. Investors are asking me, do I think this is a buying opportunity on the dip, or are the bears correct in that technological innovation is making language learning obsolete? I'm going to go over this company's latest announcements, the big deal about the new technology advancements and how it relates to Duolingo, what the company is doing about it, and its role in the future development of language learning. And then I'll look at the company's longer term revenue performance and operating profit margins and return on invested capital. I'll also share with you my proprietary discounted cash flow valuation calculation for Duolingo stock so we can compare the current market price with the intrinsic value or fair value I calculate to determine if the stock is undervalued at this new lower valuation. That's a lot to cover in a short video, so let's jump right into it after a brief message from my sponsor.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So since 2019, Duolingo has done a great job expanding revenue by expanding its reach. It's one of the best marketing companies in my opinion. Its revenue has grown from 100 million in 2019 up to 900 million in the most recent trailing 12-month period. That's good for a compounded annual growth rate of over 58%. However, investors are concerned that the development of new technologies, for instance, Apple's new AirPods, will be able to translate when you're speaking to somebody else in another language. So, two people speaking different languages can communicate with each other wearing Apple's AirPods. So, that's just the latest in development of new technology that's making language learning less necessitated. Also, the increase in trade barriers, I know might not be a direct impact to language learning, but if people are not trading with each other in different countries, there's less need for American businesses to establish locations in countries outside. There's less need for people to learn new languages because businesses are becoming less and less international. That's just something longer term I see as a impediment to Duolingo's growth. Now, some people say that artificial intelligence and new technologies will impact Duolingo, and that might be true to some degree, but I think Duolingo has done a great job. In fact, 90% of the language learning on the platform happens for free. 90% is free anyways. So it's not like ChatGPT is crushing that, right? There's another technology company, Chegg, which I had rated as a sell, as soon as I saw what ChatGPT was capable of, because Chegg, unlike Duolingo, offered most of its services through a monthly fee of between $15 and $20 a month. And you can get similar performance on ChatGPT. In fact, better performance on ChatGPT, in my opinion, compared to Chegg, and it's free. And so that's why I felt that business model was crushed as the development of artificial intelligence improved. But with Duolingo, it's already mostly free, and the platform has the gamification aspect, the verification aspect, all of that to enhance the user experience to make them enjoy being on Duolingo more than some large language model with little enhancements or features catered to the language learning process. And by the way, did you hear Duolingo is now all of a sudden giving you lessons in chess? So that's an interesting little development that I read that it added over 1 million new users in the App Store for chess. So that's interesting in that they can provide learning beyond just language learning. So the margins and the improvements have been impressive. Its operating profit margin has increased from negative 18% to 9.7%. So the growth in revenue has led to improvements in profitability. Additionally, when you look at the returns on invested capital, that's also been impressive at 14.9% in the trailing 12-month period, up from negative 54%. So the business performance in terms of increases in revenue, increases in profitability, and return on invested capital, those have been solid. So sound business here. Additionally, the business model is not as directly crushed by large language models, which is a good thing. Newer technologies like the AirPods are going to impact the business negatively, but not in the direct way that I saw with how large language models are going to negatively impact Chegg. It's not as obvious and it's not as direct. So now let's look at valuation. Of course, the big stock price drawdown has diminished the valuation on a forward price to earnings basis. Duolingo is now trading at a forward PE of 71.66, which is near the lowest this stock has traded for, according to this valuation metric, going all the way back to January of 2024. I also updated my proprietary discounted cash flow calculation for Duolingo stock, and the intrinsic value per share I calculated for this business is $315. The current market price is $279. So when I apply a margin of safety, this stock looks fairly valued according to my DCF valuation framework, and the stock looks slightly expensive when measuring on a forward price to earnings basis because of the major risk it faces and the uncertainty it faces with the technological innovation and how it could impact its business. Even though I don't see it as an obviously negative business crushing impact just yet, the innovations that are making inroads are troubling, and I can understand the stock price drawdown as a result of these innovations in technology that makes it uh, less enticing to, or less necessitated to learn a new language, especially if, you're just going to travel to a country you're maybe visiting for 3 weeks or a month. Previously, you would be really interested in going on Duolingo and learning, how do you order a certain meal at a restaurant, or how do you ask for directions, or whatever you might be interested in learning. Now, with the innovations and the text to speech on your phone and all of the things, you're not as desperate to learn how to say stuff and how to learn a language. So that's certainly something that investors have correctly foreseen, and the stock price decrease, I think, is justified. So I've had Duolingo stock rated as a hold, and I last updated this rating on April 21st when I visited the company, evaluated the performance, and didn't think it was a buy opportunity at that point. And now, after this big stock price drawdown and my reevaluation of the business, I still don't think it's a buy. I don't like the risks right now and compared to the valuation. So if I'm looking at a company with this level of risk, I would like to pay a much lower valuation, not a forward PE of 72 and a fair value according to my discounted cash flow model. I would like to pay a significant discount to those when I'm looking at a business that faces this kind of a risk. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.